Goldman Sachs says that the price of three battery metals, cobalt, lithium, and nickel, they're going to drop over the next 2 years after investors wanting exposure to the green transition piled in too quickly. Meanwhile, Brent crude topped $120 a barrel as China eased some of the antivirus lockdowns, and the EU works on a plan to ban imports of Russian crude. Joining us now is Bloomberg's energy and commodities reporter Paul Wallace. Paul, let's begin with the Goldman Sachs note. So getting a little bit more bearish on some of these metals, but what is underpinning their thesis around that?
Hi, Yusuf. Well, we've had a huge run-up in all sorts of commodities in the past 2 years since the worst of the coronavirus pandemic, but not least battery metals. We've seen some huge gains in some of these metals that are mentioned in Goldman's note, cobalt, lithium, and nickel. And they're essentially saying that for now, that run-up is going to ease and prices are probably going to drop for the next 2 years or so. They're not the first people to say this, and the likes of Citigroup have said similar things previously. But the interesting thing is the prospects for these metals are still extremely good no matter who you talk to, because of the green energy transition, because of the fact that batteries are going to be used so much more often in EVs and solar power plants and that sort of thing. But for now, at least according to Goldman, they're more bearish.
Good morning, Paul. Is there a similar story for some of the other industrial metals like copper and iron ore and things like that, or is this very much a unique case for the battery metals?
Hi, Mark. I think this is probably something that people in the commodities market will say is going to happen beyond just these three metals. Goldman itself said that these three metals, however, there's something a bit specific about them. It says that there is more supply coming on stream globally, and it sees quite heavy supply increase for all three metals. And that's a difference from, say, copper. So, for example, copper it still sees as potentially being a very tight market for the next 2 years. But the point is, investors have piled in so quickly to commodities in the past 2 years, and they've continued to do so this year, especially in the wake of Russia's invasion of Ukraine, that I think this is a sort of a sign that investors are now looking at them and saying, okay, the run-up's been pretty spectacular. It's likely to ease off at least for a bit.